You can own a part of an accounting firm for as little as $100. Yes, $100. But how, you might ask? For that, we'll have to talk to our guest today, Chris Tab. So without further ado, let's understand how you can get a share of an accounting firm for at a very minimum amount of $100. So let's welcome Chris. Chris, welcome back to the Officer Accountant. How have you been?
I'm happy to be back. I've been doing nothing but developing since we last spoke. So
Yeah,
I have a bunch
yeah.
of stuff to talk to you about.
Awesome, awesome. So to someone who has not got introduced to you or your work, would you like to give a brief about who you are?
Yeah, absolutely. If you're just meeting me for the first time, I wear all sorts of different outfits, right? Today I'm in development mode. You might see me at another time, with a suit on, doing a more professional pitch. That's a great representation of who I am as a person and how I operate professionally.
Yeah.
I can be that person who operates at a professional capacity, but also, have a deep development background. Most recently, I was with WriteWorks. I was in their innovation lab for about a year and a half, where I worked on the Right Exit project.
All right. So Chris is actually leveraging technology to help accountants and non-accountants even to get into the mergers and acquisition space in the accounting industry. And so you have got two products currently. One's Canary, where you can help get research and go and buy a controlling stake or whole firm, right? And there's Laser Fund, where it is for those who want to get just a small chunk of an accounting firm, right? So would you like to talk about that?
Yeah, absolutely. Canary was an idea I'd had for a really long time. It's this idea that if you see something on a broker site or if you see something on Biz Buy Sell, it's probably a terrible deal, right? I hate to speak in like massive generalities, but like that's pretty much the case, is that these are deals that have not been, they've been passed over for some reason or another, right?
Mhm.
All of the practices that never come on the market, right? They end up being sold because someone has approached them, right? It's typically a cold,
Yeah.
outreach that starts the conversation. So I just thought, if we could get all of this data in one place and then also append it with uh, census data and
Mhm.
append it with migratory patterns and append it with, what are the average salaries for a team in this particular region. And then with that data set, especially if you're not buying the practice, in the next town over, but if you are running a roll up or a private equity backed or a search fund, this is a great tool for you because first and foremost, I don't charge anything for it up front. You can come
Yeah.
in, you can sign up. I know you've been on there. You can browse through the practices. You can indicate interest in something. I only make money if that deal ends up coming together. So it's literally no risk. And my role in this all is I just present the information, as.
Right. So these are essentially accounting firms that are not currently seeking to get sold, but when you recognize a profitable accounting firm and you go and talk to the owner and then talk about acquiring those, and you start the conversation. So like you said, the accounting firms who are already in the market have done a lot of things to prop up their market price as
Yep.
well, right? So they have been in the market for quite some time. They want to get multiples of their revenues, but those in your database that you have used with statistics, and also like you said, migratory pattern, and what the population is going to do, and the services in the near future would look like. So you have done everything in the projection side as well, right? Whether this firm will statistically do better in the
Yep.
future as well. And so, but they are not looking to sell currently. That means that they have not thought about the multiples they want to sell at. So you have that opportunity to go and negotiate and maybe get a great deal there.
You've got it exactly.
But what the majority of the audience are currently here is to understand how they can own a small chunk of an accounting firm. So let's talk about laser fund now. If you are a small firm or if you're an individual but looking to just get your toes wet in the accounting industry, then I think this is the way to go. So let's talk about laser fund.
Yeah, I'll tell you from a developer perspective, I don't love all of my children equally. I definitely love Canary. It's a great product, right? It does what it does. But from a future looking perspective, Ledger Fund, and then I also have another project called Resistance DAO. These operate on what are known as trustless protocols. So
Mhm.
I don't have to know who you are. I don't have to know that you're actually going to send me the money. right, for a deal. The way that trustless protocols work is they're computer programs that are built in such a way that it won't allow you to scam or commit fraud or not follow through with what you said you were going to do. So in the instance of Ledger Fund, right, if we are going to put together a fund and we're going to allow people to pile in and use cryptocurrency to fill that vehicle, well, we need to know that the person actually has that money in their wallet, right? So that's a check that we do. We need to hold those funds somewhere in a non-custodial fashion, right? So I don't own the smart contract. I renounce the ownership of it. And this is probably, if you're listening to this for the first time, you're like, who the hell is this guy? I'm telling you, like, blockchain development is next level. So imagine this. You can build a program, and then in order to get even more trust with your community, you can say, I'm going to disown it. I don't own it anymore. I'm literally releasing it into the wild. If I want to make an update to it, I can't do that. I can't get in there. I can't extort money from people. I can't take money out of wallets, right? It's because these are the way these programs are built. And that's what I've done with Ledger Fund is I see this huge opportunity in the accounting space because you have it in real estate, you have it in vineyards, in art collections, right? All of these other specialty fields are already using tokenization. So this is not a new concept that's been out that's just hitting the market now. If you look in real estate, I actually know a guy, Roots Real Estate down in Atlanta, who's doing tokenization on homes they're buying, right? So It's no different from an accounting firm. We can talk about, what are the regulatory guidelines we need to follow and how do we check that people, aren't on a terrorist watch list? Like we can certainly get into that. But at its most basic level, trustless protocols allow you to pool money together in a way that it is going to go execute against what you put the money in there for. It's not like a Elon Musk, Sam Altman type situation, right? Where Elon gives up money into OpenAI, right? When it is a what do they call it? A nonprofit, right? And then suddenly a couple years later, it turns around and now it's a for-profit company. In a trustless protocol, that would never be allowed to happen because the money has been programmed in such a way it can only do certain things. So I threw a ton at you there. So if you want to dissect some of that or pull back some layers.
Say I'm someone who wants to have a stake in an accounting firm. So how does that work? What do I do? And what is the process the final process where I get the ownership of the share of the firm? And also how do I get the profits or dividends back to me as well?
Yeah, that's a great question. So first and foremost, the way that I've designed Ledger Fund is, again, from a very libertarian perspective. I don't make judgment calls on what should be put on the platform. So if somebody wants to raise money to go buy a accounting firm that specializes in Subway sandwich franchises, right? That's not for me to decide. However, how it gets decided is by the community. So with Ledger Fund, you can go in right now, you can spin up an account, you can create a proposal. A proposal is essentially a message out to the ecosystem saying, hey, here's my investment thesis, right? I want to go buy practices on the West Coast with 15 employees or less, high technology, access to high net worth individuals. That's my target. Do you want to join me in this? Right? And now what people can do is they can begin to allocate soft capital commitments to that proposal. Now, on that proposal, when you set it up, you're going to set up, hey, how long am I going to raise the money for? Is it going to be 1 day or is it going to be 90 days? If you hit the amount of money you're going to raise, because again, this is like a trustless protocol, right? It doesn't need for me to go in there and say, hey, we hit the amount of money. It's already programmed to do that. So when it hits the cap, it automatically shuts down. It doesn't allow any more investors to come in. It then sends a message out to all of the investors who indicated support for it and said, hey, we're actually going to go do this thing, right? And now as somebody who's raising capital or has an investment thesis, what you have is a backing of people that's saying, yes, raising their hand, I'm going to come in with you on this vehicle. From there, now we get into more of the regulatory landscape, right? And the legal landscape. How do we represent ownership of this accounting firm, right? So first and foremost, we're going to bring our money in to that investment vehicle. If anybody who's watching this has done alternative investments before, this is going to be a special purpose vehicle. So special purpose vehicle is nothing more than an LLC. You can set them up in Delaware, Montana, Tennessee, wherever you want to. That's going to give you what's called a liability shield, meaning your personal assets, right, have been separated from this investment you've made. You are going to be the manager of that investment. And again, this is all traditional. This is how it works in alternative investments. Nothing I've said, at least on this stream, is unusual to that. Purchase agreement. You're going to onboard those investors. We're going to take the funds, right? Again, non-custodial. We have a company that this is all they do, standard and trust, right? So I don't want to be custodial over your money. I don't want the person who is taking the investment to be custodial of your money. We want a third party who that's all they do is provide custody. So now the money is sitting in a custody, right? We're getting everybody into the investment. We're getting our docs signed. We're also going through AML, KYC, which essentially is just saying I am who I say I am, and I'm not on a terrorist watch list or some sort of sanctions list, right? And then finally, what we do is we then pool that money. It gets all sent to one bank account. The purchase agreement gets executed, and then ownership changes from the prior owner to now the special purpose vehicle. So the special purpose vehicle is actually the entity that owns the accounting firm. Everybody in there, right, is investors. And when you signed your agreement with the manager, you got things like, hey, what's my ownership stake? Do I get a discount on this? Is there like a special side letter that I've arranged with you? Right? These are all traditional things you run into the alternative investment space. It would remain all of the same. And then the one last thing that's a little bit different is we do issue what are called RWAs. So RWAs have been coming up in the last 2-3 years. This is where you see a lot of tokenization in the real estate market. You're even seeing, I saw a really interesting project the other day. A guy just graduated college. He's going to be a doctor, right? He's going to be a surgeon. He needs some help right now paying off his student loans. So he literally is tokenizing himself, selling off components of future earnings. I actually saw a project in Malaysia that was doing this as well. Like they were running into issues where year from year, they couldn't get the budget together for the rice harvest because they never knew what it was going to be, right? They tokenized the entire rice harvest. They let investors come in prior to the harvest, right? Now they've created liquidity that they can then go spend on seeds and pesticides, all the other things, right? And there is a certain amount of betting that's going on, right? So the investors in that particular situation, they're betting that the price of rice is going to go up, right? Or they're going to have a really good season. So these are all new and creative ways that you can unlock what is called illiquid assets. So an illiquid asset could be me, it could be you, it could be a company. We talk about this a lot in terms of like businesses that are being acquired. They have a lot of illiquid assets, people, technologies, IPs that they haven't essentially got down on paper and documented. So I'm bringing this idea of tokenization to the space, but it really just makes sense. And I'll apologize for this. There are probably 10-to-1 buyers in the space versus practices for sale. When you start getting under 2 million, under $1 million, that number drastically drops even further. So you have a ton of people right now, and I speak to most of them, and they come in through a Canary, they're looking for practices, and they're fighting with everybody else over the same deal.
Right.
Why don't we just de-risk this entire enterprise instead of you putting up the 50 to 60K that you're going to put in to match on the money with the SBA lender? Why don't you just say, hey, I'm going to put in $3,000 and I'm going to invite in 30 people who are in the profession, and now we're all going to be able to service this firm as it goes forward. Any questions from that? I know that was a bunch.
Laser Fund is not just one fund, right? So essentially it's a community where, let's say there's an investment idea, someone wants to go and capitalize. So he will put on the thesis on why this is a good investment. And so the community members who are interested on that, they give the commitments. And when it hits a certain amount of investment numbers, then it closes, and who have provided interest, now they provide the capital as well. And the person that initiated this investment opportunity now goes on and buys first sets of a special purpose vehicle, and then through it he buys an accounting firm, and the community members who invested in that SPP will be the owners, the ultimate beneficiaries of the accounting firms.
You got it. Yep, exactly.
How do you build trust? Let's say there's also a third person involved in buying of the accounting firm, right? So how does the community members actually trust this person to be, to provide best judgments, to have the interests of the investors in mind? How can we be safe on that regard?
So give me a scenario there. It might be like maybe an investor who's coming in, they have their own, they want to direct all the business to their other companies, maybe. Is that, we could use that as an example?
If someone is initiating that transaction, so whatever expenses he might be occurring, right, it will be occurred by the SPP as well. Will there be, or is there a risk of, utilizing the investments not for actual, purchase, but other areas of that person who initiates the SPP?
Yeah, that's a great question. Yeah. We first and foremost, I would say that's probably a risk as well that you run into in an alternative investment. Very small window, but I will say, like, yeah, there are probably some opportunities during that flow. Not in what I'm describing, but like if you were going to go buy a Subway franchise with a bunch of people, there is a moment when all of the money gets collected before it gets sent to the business that you're acquiring, that like that person technically might have access to like $1 million, right, in an account. They're supposed to send it on. So that's sort of that risk profile that we're living in. Blockchain destroys that. It doesn't allow. So first of all, I never have, as the investment manager, I never have access to the money. Like I never really have access to it, right? It's locked inside of a smart contract. That smart contract can only do so many things, right? So it may only be able to do 3 things. It can take money in, right? It can send money out, but to only prescribed addresses. So we use wallet addresses in Web3, right? So it could say, hey, money can come in from anywhere, but it can only go out to this one spot. If not, the money's not going anywhere, right? And then maybe the third thing it'll do is maybe 60 days after the investment date has passed, in order to protect ourselves against a bad actor, maybe the contract just completely opens up 60 days out, like 60 days after money went in, an investment begins to close, and everybody gets refunded. There are ways. This is what's so beautiful about blockchain development is you completely take the scammers out of it. Now, I'm fully aware that like while I'm saying that, like Sam Altman-Fried, FTX, Lunaterra, right? I'm just like listing scams in the Web3 space that completely blew things up. Those were companies and bad actors. Those were not smart contracts. But yeah, this is what's so nice about a trustless protocol, right? What do you really need if you're going to make a co-investment with someone? If their investment goes no further than the amount of money they've put in, right? If they're not going to be operating the business with you, you essentially just need to know, do they have the money? Are they a legitimate person that I can take funds from? That's pretty much it. You don't need anything more than that. And that's already hard enough, right? Like in traditional investments, that's already hard enough to know, does this guy have my best interest? Is he going to be a good partner down the line?
So this is when you decide before you initiate the investment as well, right? When let's say there's an investment manager, he's trying to buy a firm, but what interest does he have, right? So is he investing a lot of his own money as well? Maybe that, and also other community members. The trust they put in that person as well. So I think with the blockchain or with a lot of people coming in, there's also this opportunity where every person will do their own research of the person as well.
Yep, they should. Absolutely.
And that will provide a lot of resources for everyone, right? So someone might have research in one aspect, another will do it in another, and that way you can build trust. And if you trust that person, trust that investment thesis, trust everything there, then you will go and initiate your interest and move ahead with the investment as well.
Yeah, you got it. Yeah.
Right. So, okay, so how does the process work for someone who wants to get in this pool, right? So you mentioned laser fund. How does someone like me, let's say, if I want to invest in an accounting firm or invest in a thesis that someone else in the community puts out, what is the first step that I do?
Yeah, the first thing you're going to do is you're going to create a wallet on our website. So the way that wallets work for anybody who's not Web3 native, how it works is there's a bunch of different ways to set up wallets. But what I've done is I've taken all of the friction out of it. So all I need is an email address. It will then spin up a wallet. That wallet will be yours, meaning I don't have access to it. I can't touch it. It is yours. When you get it, it's going to have nothing in it, right? Now, you can, let's say you have MetaMask or you have Trust Wallet or Rainbow, right? You may have funds that are sitting in those wallets. You can transfer them in to your Ledger Fund wallet. The other thing is your Ledger Fund wallet, you can take it anywhere you want to. It's not limited just to my website. So once you have a wallet, you want to bring in money. So that might be Polygon is what I would recommend to people. I'm a big proponent of Polygon, low transaction cost, very high speed. And what you'll do is you'll purchase some Polygon or you'll bring some Polygon in to the platform.
So to go to the Polygon is a cryptocurrency?
It is. Yeah, it's an EVM layer or layer 2, what we call it. So it's built on Ethereum, but it's essentially a cryptocurrency that goes much faster than Ethereum. Because if you've ever built anything on Ethereum, sometimes if you just want to deploy a smart contract on Ethereum, it might be like $80. Think about that. You're just deploying something. And by the way, because it's blockchain, it's immutable. So if you screw it up or you do something wrong, that's $80 down the drain. You're never getting that back, right? So you got to start all over again. That's why I like Polygon. It typically takes about a cent, less than 1 cent. So if you're going to do a transaction on Ledger Fund, it will ask you to pay for the gas when you're initiating a transaction, whether you're buying our native token, which is LGR, or if you're putting up a proposal, or if you're making a soft capital commitment, it will ask you to pay for the gas. I want you to go look at that gas charge though. Often it is 0.0001 cent, right? And that's why I chose Polygon, in addition to all of the security features that they have and the extensibility that they have with some of their smart contract offerings. But yeah, very easy to get started. Spin up the wallet, bring in Polygon, buy LGR, and now you're good to go. You can navigate the platform. It costs 25 LGR to set up a proposal. It costs 1 LGR to vote on a proposal. They're all soft capital commitments. So I'm going to charge you $1 whether you're soft capital committing $1 million or if it's $100 million, right? We only charge $1 just to limit the spam on the platform.
Right. So, but you could also use any other cryptos. If I'm someone who is investing, I could use any other also, but you recommend using Polygon.
Well, the way that the contract is built right now is it only accepts Polygon. It's funny you mentioned that. The last 3 days, I've actually been working on a new project that has grown out of Ledger Fund and another one I have called Resistance DAO. And where I'm at right now actually is I think I'm going to go just build a trustless protocol that will service everything from I want to buy a business to I want to tokenize myself on a marketplace. I want to tokenize my IP, my services. I want to list a job. I need a bounty. Hey, I need a smart contract audited, or maybe I need a designer, right? All of those things can be put on the blockchain, and people can interact with them in ways where and I keep saying this word, trustless protocol. So I'll give you an example of this. I just built a referral system. So, and I built this for Resistance DAO, and it's a multi-part kind of thing that I built here. But the first thing I did is I went on LinkedIn, I posted a free job for people, and I said, hey, rep our NFT. If you sell our NFT, I will give you $25. We charge $50 for the NFT on Resistance DAO. Now, I had to figure out a way to do that, right? So I built an old school, hey, once you log into the platform, you can generate a referral link, right? When you share that link out, what happens is people come back to the site, it captures the referral link, right? It transforms it into the wallet address of maybe it was you that sent me the link. Now I know your wallet address, and then it pushes it into the contract at point of sale. So when you're making your purchase, it knows that Chris referred me, right? Well, it goes into a big smart contract that then it double checks that you actually bought the NFT, right? It then automatically releases the $25 and it sends it to the person. It's instantaneous. No waiting days or months to get paid. That can be done with almost any arrangement. So I've been spending a bunch of time on all these other projects, but I think like at the heart of what I should be working on right now is protocols that allow people to do a whole bunch of things that they're not even thinking about right now.
So Laser Fund or Resistance DAO or the other project that you are doing, so all of them are essentially a marketplace of sorts where people come in and they transact with each other. They talk about, buying accounting form. For laser funds, it's only accounting firms. But for other projects that you are doing, it could be accounting firms, it could be doing something else. But there are projects that you go in and invest into with other people of the community.
Yeah.
Okay, so the $100.
Yes.
We talked about $100. Where did that number come in, and how can I, as a person, invest in an accounting firm with just $100?
Yeah, I mean, look, I'm not the first one to get here. There's a ton of platforms over the last few years that have kind of come in with that same marketing pitch. Do something for $100. I've even seen it, like do it for $1. It is 100% true. I'm not misleading anybody. You certainly could come in and make an investment for $100. I think that's also a part of the core mission that I'm on right now. Is I was in the alternative investment space. I saw how that works. There are opportunities that come about, but they're only really presented to a small number of people. You kind of have to be in the know. I invested in a deal 2 years ago on it was a Ripple, right? So Ripple pre-IPO, I own pre-IPO equity in Ripple, right? That's a great deal. More people would have been great, but I was part of a $25 million tranche that got in on the deal, right? You needed that amount of capital to make that purchase. So my point here is when people can pool assets together, it allows them to reach parts of the market that they never could before. So this is way beyond accounting firms. This is more just about all of us have money. If we start talking to each other and finding ways to put that capital to good use, we don't have to rely on sort of this like traditional class of investors and brokers and people who are going to make these decisions for us. We should be making these decisions.
That $100 is going into one accounting project or one M&A project. But if someone is asking for soft commitment, the least they will ask is for at least $100.
Yes,
if I'm making parallels.
And they can set on their investment what they want the minimum amount to be that somebody can put in. So that's actually what I'm working on right now, as well as building. I think I have a 1-page form. I'm going to then expand that to like 3 pages, just so it has some advanced capabilities. If you really want to customize in, you could say, hey, nobody can hold over 15% of this investment. So you can kind of like kick out some of the whales, and then even be like, only unique wallet addresses can invest in this. Meaning like we can't have the same person coming with like multiple wallet addresses trying to get around the system.
So to get into the laser fund, is there an entry fee or how does that work?
There's no entry fee. That is what's so great about it. There's no entry fee. I mean, with the exception of you got to pay to play, you got to get some Polygon. But besides that, I don't charge you anything up front. And in fact, the way that the platform makes money, like puts money in my pocket, is I make money off of the currency that gets sold, but I don't participate in any of the deals. I try to keep a really strict profile on that. I don't invest in deals. I don't promote them. Like I said, very libertarian view on the way that I built the platform. It's there. Things like Napster, you can do anything you want with it, but there's just a lot of lines you got to be aware of in this space. Like when you're taking capital in, you definitely cannot be out there promoting things or treating it special or saying things about investments that aren't true.
All right. So what we want to do is, we've understood that you can get in and vote into a project that you like. Then when everyone gets behind that and when you start, then you put in your money, right? So when you buy token, it's always there. It's your money. You can get it out. But when you make commitments and when it's gone to the investments, now you'll own a part of that investment and accounting firm.
Absolutely.
And what I also like about the project that you are doing is there's this laser fund. And when there's a project that someone brings in with their proposal, their thesis, you can also use Canary to actually see whether it is a good fit for you or not as well, right? Yeah,
that's crazy.
So that is quite. So accountants, we are not used to. We do understand investments, alternative investments, but we're not used to this crypto scene, and also we want to invest in accounting firms that we understand accounting firms. So there's that where there's low risk, where you are not putting too much money. You can slowly, with other projects, you can get in on more value as well, but you can just start with $100 and see how it fares for you, and maybe also do another investments, slowly build that. And I think that is a very good way to do. So thank you, Chris, for this exciting opportunity that you have shown us, and we'll also do demonstrations of that later on, and we'll put the links as well. So thank you for this podcast. Thank you very much, Chris.
Ledger Fund is not for 99% of accountants out there. It just isn't. Right. Mm-hmm. It's hard enough to try to convince people than to try to convert them. So this is really for your crypto CPAs, people who understand the value of cryptocurrency. It is not for the vast majority of accounting practice investors, just because they're not interested in this, right? And my job can't be too full to convince and convert them into something new. So.
Right. So that is also what I was saying is, even if you are not a crypto interested person, a crypto head, but you can just start with a small amount of money and see how it fares, and then you'll understand how this everything works, and maybe then increase your investment in other projects as well. So I think that there is something there where you'll understand the crypto industry as well, and also the M&A scene as well, and then you can increase your investments and go deeper into it if you want. But if you are just starting out, if you want to own a part of an accounting firm, it's the way to go.
Yeah, and there's no risk, to be frank.
Yeah.
You're not losing the $100, right? You're not
Yeah.
actually investing in the practice. So when you're moving money over to LGR and you want some LGR
Right.
tokens to participate in the platform, it's literally just to create the proposal and to vote on a project. You don't need the $100 to actually make the capital investment today. This is more of just are people interested in my thesis? Great. Who are they? Let's go off and do our thing.
Right. So only for showing your investments, you need just a little money, and then when your project or your interest or you are in a project, then you invest your $100 or more than $100, whatever you want. So yeah, awesome. Thank you very much, Chris, for this exciting actually podcast, because crypto is quite new for us as well, and M&A market is heating up in the accounting industry as well, and you cannot go in with a big wallet and just dip in and lose your money. So you can get started with a little and understand the scene, and with that you can increase your capital whenever you want. So thank you very much, Chris.
Absolutely. Thanks so much. Thanks, everybody.